Hello, everyone, and welcome back to BCR's Daily Market Insights. I'm Ahmed, and in today's market updates, we'll be focusing on the latest developments for the dollar index, DXY, crude oil, spot gold, and USD JPY following key events like the Federal Reserve's hawkish rate cut decision. So let's dive right in. First up, let's have a look at the dollar index, which has been on absolute fire since the past couple of days, hitting a near 1 year high of 108.28, following the Fed's announcement of a 25 basis point rate cut. While the cut was expected, the dot plot signaled only two cuts in 2025, a much more hawkish tone than the markets anticipated. Powell emphasized the economy's resilience, downplaying recession fears and maintaining a strong dollar sentiment. Technically, the DXY remains in an upward trend. On the daily chart, indicators like the 14-day RSI and MACD reflect strong momentum, with key support at the 107.5 and 108 range. A sustained move above this zone could push the DXY towards 108.5 or even the psychological level of 109. However, a failure to hold these levels might lead to a retest to the 107.56 levels. Next up, let's have a look at gold. Gold has been grappling with the Fed-induced pressure, retreating from a 5-week high of 27.26 to near levels 2600. The hawkish rate cut dampened the bullish sentiment, with the dot plot indicating a tighter monetary policy for longer. Technically, gold is in a precarious position, reclaiming the 2600 mark, and the 100-day SMA at 2605 could reignite some bullish momentum, targeting levels of 2633 and 2650. However, a failure to hold these levels may see gold retest the 2583 low with a further slide down to 2536. Now let's have a look at crude oil, which has been struggling to move decisively, hovering around the $70 mark for the sixth consecutive session. This level reflects a tug of war between declining U.S. crude oil inventories and signals from the Fed that rate cuts will slow down in 2025, which will strengthen the dollar, and it's applying some downward pressure on oil prices. From a technical standpoint, 70.96 aligned with the 100-day SMA acts as an immediate resistance. Breaking this could pave way to 72.23 and 72.54, but liquidity concerns toward year end may cap some gains. On the downside, solid support lies at 68.50 with 67.12 as a fallback. Now let's have a look at the Japanese yen. It's struggling against the US dollar right now, and as we saw, that's from the dollar index. The US dollar is on fire. The divergence between the US and Japanese monetary policies continues to drive USD JPY higher. After breaking above the 157 level, the pairs capitalized on the Fed's hawkish stance and the BOJ's conditional approach to tightening. On the daily chart, USD JPY maintains bullish momentum. Key support lies at 156.75 and 156, while resistance levels at 158 and 158.62. A breakout above these levels could propel the pair to the 160 round figure, marking multi-month highs for the pair. In summary, we're seeing some strong trends on the DXY and Japanese yen, while crude oil and gold are at some critical levels shaped by the Fed's hawkish pivot and some other macroeconomic forces. Stay tuned for more updates, and as always, trade wisely. Thanks for watching, and I'll see you in the next analysis.